Thanks to our friends at The Motley Fool for sponsoring this video. Visit fool.com/ASYM for the top 10 stocks to buy right now. Has Verizon finally turned a corner? The stock has absolutely been destroyed by investors over the past 6 months, and it's been lagging the market for quite a while. Now a very high dividend paying stock, but that means that it could be a value if operations start to turn around. I think we saw some good signs in the second quarter of 2023, so I want to dig into those numbers. My name is Travis William. Thanks for watching Asymmetric Investing. Please subscribe here on YouTube for all my content and check out my newsletter, Asymmetric Investing. Got a link to that in the show notes. Let's go straight to the presentation to show exactly what happened in the quarter. I'm going to start with a consolidated financial summary because this shows the overall picture for Verizon. You can see that revenue was down 3.5% year over year. But look at these two segments. What investors need to keep in mind is that the red segment, the services segment, is actually a very high margin segment. That was actually up slightly, about $200 million to $27.3 billion in the quarter. What was down in the quarter was wireless equipment. So this is the equipment that Verizon subsidizes. When you get one of those deals on a new smartphone, that subsidy comes from Verizon, and this is where that line item comes in. So this is typically a negative gross margin business, not something you want to see growing as an investor. What you want to see growing is this red segment. To even break that red segment down even further, we have the total wireless services revenue. This is really what we think about with Verizon as being a wireless company. And you can see that revenue was up 3.8% year over year to $19.1 billion. So pretty solid results in the segments that really matter for Verizon's financials. The cash flow summary is where you start to get into the really interesting numbers. Now, one of the things that I have said in the past is that this dividend here, so a payment of $5.5 billion just in the first half of the year, that should actually come down because I would like to see Verizon's debt come down, $152.7 billion. The net unsecured debt is $126.6 billion. So that's actually coming down a little bit this year. That is a good sign, but I still don't like that really high debt load and would like to see them cut the dividend back, maybe get that down about half of where it is today, just to reduce risk and debt on the balance sheet. But with that said, cash from operations is improving. So up slightly. This is the first half of the year numbers. Remember, capital expenditures, $10.1 billion. I want to give a little bit of detail into that. Capital expenditures in the first quarter was $6 billion. That means second quarter capital expenditures was just $4.1 billion. And that's about what management expects to spend each quarter for the rest of the year. So that CapEx number is starting to come down pretty significantly and is about at that $17 billion run rate the management has expected for next year. Free cash flow, $8 billion. But again, first quarter free cash flow was $2.3 billion. Oh, that means second quarter cash flow was $5.7 billion, a big increase in free cash flow. So that is a very positive sign just for the second quarter. And again, as we see increased cash from operations and falling capital expenditures, we should see pretty solid free cash flow for the rest of the year. Dividends paid, $5.5 billion. So there is a little bit of excess cash. Management has actually just been storing that on the balance sheet, $4.8 billion in cash now instead of $1.9 billion at the end of 2022. But that's why the balance sheet looks a little bit better, a little bit lower net unsecured debt, and a little bit better net unsecured debt to adjusted EBITDA, which is a proxy for cash flow from the business. So in general, steady improvements. I'd like to see them moving faster, but this is Verizon. This is a pretty slow moving company, and definitely like what I see on a quarter over quarter basis. The final thing I wanted to highlight is where this strength is coming from. And I've been talking about fixed wireless on this channel for almost a year now, that fixed wireless, or the broadband that actually comes from 5G in homes and businesses, this is really going to be the growth driver for Verizon in the future. That continues to be the case. The third straight quarter that we have broadband net additions over 400,000, 384,000 of those were fixed wireless additions. That was a very strong sign. Also strength in the business segment, 144,000 additions. Consumers, definitely a different story. Lost 136,000 consumers. And then also prepaid net additions were down 304,000. So a little bit of a mixed bag, doing very well in broadband, very well in business, and not very well at all in the consumer market. Doesn't seem to be a lot that Verizon is able to do to turn that around. I think that's one of the surprising takeaways over the last few years. But there definitely is a segment of consumers that really value Verizon's premium service. So has Verizon turned a corner? For now, I think the answer is yes. In the first quarter, the company didn't generate enough cash flow to even pay its dividend, much less pay down any debt. In the second quarter, there was $2.9 billion of free cash flow in excess of the dividend that was paid out. So that's why you see that balance sheet get a little bit better. I would like to see that spread expand even further. We may slowly see that happen. I don't think we're going to see a big cut in capital expenditures over the next few quarters. A lot of the reduction in CapEx has already happened from the peak last year, but optimizing that would be good. And then also increasing cash flow from operations would be a positive. Incrementally, Verizon may be able to do that with some of these broadband additions and also some minor price increases. But this is just kind of steady as it goes. And given the fact that the stock has a dividend yield of 7.6%, that may be okay. Just being able to survive and slowly pay down debt may be good enough for Verizon because investors are getting a pretty solid return just with that dividend yield. So I think operationally, the company has started to turn a corner. I want to see more, but I'm definitely holding on to the shares that I have. And if there is a significant improvement in operations over the next few quarters, maybe we even start to see consumers coming back. That is going to be a positive that would make me more interested in buying more of the stock. But right now, I'm just holding where I'm at. So what did you think of the quarter? Leave your comments in the comments section below. Don't forget to subscribe to Asymmetric Investing. Thanks for watching, everybody. See you here next time.